Turbo Trading with head trader Robert Knight, MBA.
This is a talk about VRCA and units offering they did with pre-funded warrants. So one of the members asked me a question, what exactly does that mean? So I haven't looked at the SEC filings, but so it's not really the actual price that the funding was done at is not so important. It's the transaction itself that we're going to talk about. But you can see back here in July, this stock had gapped up, traded to 781, and then, or not gapped up, trended up, and then gapped down to 479. This is probably where they announced they were doing a financing and with pre-funded warrants. So at 675, I think the price was. As I say, it doesn't really matter what the price is, but let's assume that's what it was, because here you get a big gap down, and then it sells off and trades down to this 286. Had some news out, and today popped. Maybe they need to get it up to get to some more additional funding in it. But it appears, you can see a very strong pop, traded sideways in here, then got whacked. And then got into strong rising channel and double topped up here around 7 and then selling off. Most likely, I would say, the market hadn't really read the SEC filings and as we hadn't, and it started to go up. So we just traded the trend. We weren't so interested in the fundamentals of the company, but just that it was a strong trend and it was going. So two things come into play here. One, if the financing was done initially at 675, those that were holding the stock at 675 or higher, I mean, that would be initially would be their adjusted cost base. But let's talk about the pre-funded warrants instead, or in addition to this. So you probably get a share in a warrant. I'm just speculating on that, but it's, maybe a half warrant. I don't know. It doesn't matter. But if it was one share and one warrant, pre-funded warrant, that means the warrant exercise price is nominal, probably a penny per share. So what that does in effect, it gives you, if the original underwriting was at 675, which you bought at 675, but you get a warrant to buy another share at no cost or a penny, then your actual ACB is going to be half of that 675. So 337 and then a penny, so 338, call it 340 for a nice round number. So those that have the warrants can sell the warrant in here and then go and exercise it for a penny a share. This has a 25 million share float, 16% short, 4.4 million shares, 25 days to cover. So if there was news, that should really get things fired up. And that's probably what the market saw to start with. But once the realization came into play that, there was all these warrants outstanding, and people would just sell them, or would sell the stock and exercise the warrant, that put a lot of pressure on the market. So the pre-funded warrant, just to recap, has no cost, a penny cost. And so it adjusts your financing cost, because if you took the trade at 675, a share in a warrant, but the warrant has no cost, in effect, your actual cost is half of that price. And so that's where you see this market here. It sold off down. I mean, it did dip down in here, but here's your average cost right in here, and that was the bottom of it, around 335. Dipped down and came right back up. So if anybody has any questions on that, just post me and I'll try to explain it differently, or if you need clarification.
Don't forget to like and subscribe to our channel. Reach new levels of trading proficiency. Become a member at turbotrading.biz.